Welcome back to U.S. Farm Report this weekend. Sam Hudson and Jim McCormick joining us. All right, a lot of news in the markets this week, whether it be the rail situation or China or also exports overall. But Sam, what was the markets focused on? What caught the attention of traders this week?
Well, coming into it, there were plenty of headlines that I would kind of refer to as noise, but the only thing that we could really definitively trade is the fact that we've seen soybean demand remain much more current compared to corn. Obviously, exports on corn are just floundering. I think we have to expect a reduction in that from USDA here next Friday. But just the fact that we've seen that steady stream of beans, and like I said, we're current. We're getting into the end of the year here. We've seen an improvement in basis. I think that could start to backtrack now, and then we could see a little bit of pressure on the spreads. But going into first notice day here for the December contracts, I think that was another thing too. I think open interest for these markets is going to be something to note after those December contracts go on off the board. But we'll have to see if there's a catalyst to really facilitate everyone wanting to get back on the boat.
Yeah, Sam mentioned that USDA report that we'll have next week. I mean, typically the December report, not much news out of that. I mean, we're really focused on the January report where we get those year-end numbers. Jim, could this year be different?
I think in general time, the U.S. numbers are going to pretty much punt. They're going to reprint the November numbers. I do think you'll see a little bit of revision of the South American crop. I would expect the Brazilian crop to get a little bit bigger and maybe the Argentina crop to get a little bit smaller as the market, as they try to adjust for the weather problems. But in general, this report is going to be a non-event. We're going to race right back to looking what the January number is going to be, as well as the quarterly stocks number.
When you look at exports overall and what's going on in China, there's talk that we're going to see China loosen restrictions. We saw the impact of protests across the country this week. Sam, I mean, with the export picture overall, is there concern about China and maybe those policies won't be loosened enough?
Well, there's uncertainty in general, but at the end of the day, the weather in South America, the Southern Hemisphere, is really going to dictate overall price direction. I think what we're talking about here is how much demand can we garner between now and when they actually start harvest. With stocks to use here in the U.S. under 5%, there's just not a lot to give. So you can have those concerns long term, but ultimately the market's going to be underpinned to a certain degree until we actually get to that point. We see more bushels flowing, or actually see evidence of demand truly slowing. From all the protests and pushback that we've seen, though, I would err on the side that we see them slowly reopen. I don't think it's going to be a complete wave. Part of this is a PR thing for them too, just as well.
Well, with U.S. dollar that's been holding pretty strong, are we priced out of the market for some of these export countries? I mean, is that the issue that we're seeing right now with corn, Jim, or is it something else?
Well, right now, I think the big thing is it's the higher dollar is hurting us, as well as just Brazil, Argentina, and both the Ukraine as well with the export quota. We are the most expensive product in the world at the moment. The weaker dollar, as it's making new lows this past week, should help bring on a little bit of demand. But that is our biggest problem, is the higher currency level and just cheaper, products. But we do believe we'll get a little bit more competitive on the U.S. corn market, specifically export-wise, as we move into 2023. That traditionally is when we do market more corn. I will want to make one note, Tyne. I am a little bit leery about the Chinese. They bought a lot of beans from us. But remember, we have this trade war going on. The Biden administration has ramped up that trade war by blocking the technology sale of chips and that technology to the Chinese. They really haven't been happy about it. They haven't pushed back by it. I am a little bit leery that we will walk in one day and we'll find out the Chinese have canceled bean purchases and moved those demand down to South America as a way to retaliate for those, ratcheting up of the trade tension. So it's something I think you need to keep an eye on.
Sam, if that would happen, are we in a different situation than we did see that trade war a few years ago? Or do you think we would just see soybean prices slide immediately?
Well, the weather has to be the scapegoat, right? They're not going to really pull that card. And as Jim mentioned, I would fully agree with him in terms of the risk long term. But they can't pull that card unless they know they have it. We're all expecting this big, 4 to 6 million acre increase in South America. Everyone's expecting that already. It's already kind of written down, but now they have to prove that. If they start to do that, then I think you could see some sparring, some jabbing as you get into the second quarter of next year. But between now and then, we're still going to have to serve the market, and we've continued to see soybean movement prioritized to that of corn because of barge freight and several other factors. As we get into spring, as Jim mentioned, I think that could help corn a little bit. If we can get some rains in these rivers March, April again, we could get some of our exports back. Between now and then, it looks like it's going to be a tough road.
Well, speaking of freight, there were some questions about transportation, especially with the rail situation. So we'll get into that, as well as interest rates, what the Fed said this week and how that could impact the markets overall. We'll talk about that later on U.S. Farm Report this weekend.